Good morning, everyone. This is Reggie Holmes from All Things Financial Cafe, here with your Tuesday morning update. It's November 15th. Sorry. We can see this morning futures are down 107 points. Nasdaq down 20. S&P is at 1275 at 1239. Now, what we talked about last week is starting to take shape this week. The Europe is starting to fall apart. We're starting to see some things. Let's take a look at the euro real fast, and we will see that the euro is well on its way down to the downside here. And this is what we want to see. As the euro falls, the market will fall. And we've been telling people that this is coming if the market didn't do certain things, which we'll talk about again in a minute. You can see here the market, you can see the euro breaks down, how it failed, a breakout of an inverted head and shoulder. Shoulder, head, shoulder, breaks out, fails, then comes down, tries to retest the highs again to break back above it. It failed, so that was a major sign right there. Market pushes back down. So we should see the euro definitely in the next month test this low of 132. It's at 135, if not lower than that during this first month. This is what we call the first leg of something major that is coming, that we believe is coming next year, which we'll get more into in our actual subscription room. Now, we look at the S&P here. As we talked about last week, we was hoping the S&P, or we were looking at the S&P. We had two things on our plate. We were neutral on the market at this time. Couple things we needed to happen. We see that the market went up to the 200, broke above it, didn't follow through the next day, then closed back below. That's failure number one. Came up, hit it again, closed above it, came back the next day, fell below. Failure number two. Came up, started to work towards it, got to 1263. The 200 is at 12672, 1275 area. We opened up the market down yesterday, and we're down this morning. And we're looking like another down day, especially with the euro falling. So looks like this is the start of a move to the downside, a correction to the downside, which I believe can take us back near this 1100, maybe 1080 area, maybe by the end of the month, sometime into December, before we may have a little quick rally in the market up, and then we see some things for next year. We'll reassess and see some things for next year, but we believe that next year is going to play out like we've been saying, more downside action. So we look for some bearish action right now in the market. I don't believe this is going to get any better right now. This euro thing is not going away. This euro thing is very serious, and people aren't taking it as serious as they should, and they're holding on to their trades. But fear is coming. Fear in the market is coming. So get ready. So let's look at a couple of things that are very alarming. This is an article written by Dimitri on Seeking Alpha, and let's look at this comparison here of the 2007 and 2011 market. The two head and shoulder patterns. We had this the 2002 to 2007. Going into 2008, we can see a shoulder that was developed here. We can see the head here. We can see the shoulder here, and then we can see the big fall that we had. So usually when you have a head and shoulder pattern, you take the bottom and you take the top, and that gives you the measurement of what the fall is going to look like. When that happens, usually can draw a straight line, call it like a neckline. This is about 350 points. We take 350 from this low of 1200. We take 1200 down to 850. We can see in that 850 area, the market kind of had a little try to attempts at rallies. It failed with even lower to 666. Again, okay, at this low, this is 2008's low. We rally up to 2009, and we can see here we had a nice rally up. Then we pulled back. Then we pulled back up. We had a nice rally up to 1300 early this year into May, and then we can see the market come crashing down in August. A nice fall started in June, popped up during July, came back down during August, then trading sideways for the next few months, came up to the 200-day moving average line again, and it has failed. So again, we have failure here at the 200-day moving average, which we just talked about on the S&P, which is also creating a head and shoulder pattern. Shoulder, head, shoulder. This is what happened in 2007. We're yet to see what's going to happen in 2011, going into 2012. So we can see the RSI here, which is the overbought, oversold indicator. We can see the diversions. The market's not moving, but it's moving up, so that's a diversion. The market's trying to move down. This is moving up. At the time, we had a market that was rising, and this was falling. So it's a serious divergence going on in the IRS, and we look for it to continue to fall and fail there at that area. So let's look at some of the macros, the similarities of this market. This is just a great article here. We can see a trailing bull market is 105% before the fall started in 2007. Going to 2008, we can see the same run up that we had here, 105. Same reversal pattern forming, same diversion. We had a violent break below support, 6 weeks. This one was 4. We had a sideways established, and then established new low, 4 weeks, same thing. Violent mid up after that test, 14% in 2007. We had a 20% run up to that 1300. Return to 200-day moving average, bam, bam. Return to established resistance line. Last time we had a 53% drop. This one, if they don't get it together, could be worse. And then we go down here to the Euro debt crisis, U.S. mortgage crisis. Let's look at the difference between now and back when the U.S. had its crisis. You can see GDP in dollars, 15 trillion. Eurozone, 16 trillion. So it's about the same. But the debt, 9 trillion was the U.S. debt, 15 trillion. It's even worse now with the euro. The debt to GDP was 60% for the U.S., 94%. Ooh, that's major. Then we got bad loans. We got mortgages was the major problem in the U.S. Just think, just mortgages. Where over in the euro, you have the actual complete country that is in debt, that is under the water. So now we got bigger losers with the investment bank, housing market, insurers, where here now we're having countries that is going to lose out. So this is a far greater problem than we had in 2007, and that's why we could see major problems in the market in the future. So we have some trades and things that you can do that we will talk about in our subscription room in All Things Financial Cafe platform. I'm going to show you one more thing from Zero Hedge, another comparison chart. You can see here in October we made a high. You can see in May we made a high of this year. Let's look at the similarities. We get a nice pullback. We get a nice pullback. We get a rally up. We get a rally up. We get a fall. That's June. This is August right here of this year. Then we go up, down for a few months. Up, down, up, down. This is the recent rally we just had in the market in October. This was October 2, I believe, because this is September. No, this is October, September. This is December going into January, sideways, and then a big fall during the summer. So same thing's happening here. We're moving down. So this is actually, I believe, November, December, Christmas rally. Then we fell in January, failed, then we kind of pulled up a little bit, and then we failed. So the same pattern is forming. So I believe we could be starting this first major leg down here, where we lost, we went from 1400 here down to about 1200. That's about 200 something points on the S&P. At that point, we can see here we're at 1200, 1270. So we're looking at 1070, which again on the S&P we said that low was 1070. So we're looking somewhere back near there. Let's see what happens over the next month and a half. Maybe this last the whole month of November, going into December, and then we get a Christmas rally before possibly this next leg down here, which would take us below 666, which was the low of 2008. So those are just some key points to look at I'm not saying it's going to happen, but I tell you, there's a great chance of us doing it. There's some great trades that we're going to have put on that you'll be able to get a hold of, that you could take advantage of this fall. This is the euro. We can see the euro is breaking down. It broke 136 last night, which is a key area that had held for a while. It had a brief blip to the downside back in early November, but now we're back below there again. So this is major because we broke that support again, and we didn't bounce back like we did here. So we keep an eye on the euro closely. I believe that is going lower, and we should see more downside action in the euro because this is where the problem is. Other than that, look for some trades. I like Apple. I think Apple is going to fall harder. I think the market is going to fall harder. So you're going to see a lot of tech stocks fall hard because the money's not going to come in the market. So just keep an eye, be patient, sell rallies. I would look to sell rallies, and keep your stops tight. All right. Again, this is Reggie Holmes from All Things Financial Cafe. I'll be back later with another update. Again, this is for educational purposes only. We are not licensed investors or advisors. Please seek one if you need investment advice. Again, here we are just giving you education of what we're doing. Now, happy trading and have a wonderful day.